Hello, this is the Naples Money Managers with news you can use. This is November 30th. I am Marcus Bickle. I am with Dennis Nelson, and off camera is John Kincaid. And as I said, this is news you can use. It is the end of November. Can anyone believe that we are entering December of 2020?
Well, I continually ask myself, what happened to this year? And then I remember, oh, that's what happened to this
Right.
year.
This feels like both the longest and the shortest year
Isn't it something?
ever.
Yeah.
We're all familiar with that. There is some good news out there. The vaccines continue to click along. For some local news, I know our governor, Ron DeSantis, has moved vaccines to be administered to the high-risk population. So that would mean people in nursing homes, frontline workers, and I believe the moment that is signed off by the FDA, that stuff will be ready to move. So our state is moving in the direction of preparedness for the next phase, which would be vaccination and hopefully return to normal.
Hopefully return to normal. Yeah, interesting to see how long this phase-by-phase process is going to take. A huge logistical problem.
Absolutely.
Getting this vaccines to where they're needed, getting the people to where the vaccines are.
And the public perception around the vaccine.
Yeah.
People are a little bit reticent to do it. Which I personally don't understand, but
I'm going to be first in line if they let me.
and I'll be right behind Dennis. So, and if Bill Gates is listening after we get those vaccines, hi Bill.
Yeah.
That's a joke. But Dennis, what do you have for us today?
Well, we're just looking at the stock market, of course. That's my focus. That's my interest. November apparently was the best month since 2000 and or since I'll get this right. 1987. The Dow was up something like 12% so far this month. They're taking a little bit off of it today, but it's been a good month. I think that Biden is saying the right things that people want to hear. He's talking about stimulation. He's talking about jobs. He's talking about getting people back to work. He's talking about infrastructure, and he's not talking about inflation. He's not talking about our debt. And so far, he's talking about the right things and not talking about the things we don't want to hear about, at least in the short term.
Yeah, people like to see a little bit of movement, and those other things, like you said, will come up eventually.
Yep. One kind of little warning note, and I think I mentioned a little bit about this last week. We're seeing a lot of speculation in small cap stocks, particularly in the electronic vehicle arena. Lots of names are popping up that you never heard of, and they skyrocket because they've got some idea.
Mm-hmm.
Always worries me to see speculation going on like this in stocks that have no earnings and in some cases no revenue.
Absolutely.
Yep, and this of course is what we saw in the year 2000 with a lot of internet stocks that admittedly were way ahead of the game, but now of course everything is about the internet, but sometimes just being too early is not a good thing.
Absolutely, and we totally understand. Like everybody wants to get a Tesla on the ground floor. Tesla at $5, and and there was a time when Tesla had no earnings, and it didn't look like it was a real company. But it's really difficult to distinguish between what's going to be a Tesla and what's going to be any number of these electronic vehicle makers like Dennis is talking about, which are nothing, will amount to nothing, don't even have a product. And if we knew, well, I'd be sitting on a beach somewhere.
if we only knew.
Absolutely.
That is so correct. But we're seeing the option premium on these types of stocks just at enormous levels, and of course the stocks way higher than what they should be, considering the revenue they have and considering the profits. But people are looking down the road, and maybe there's something happening out there that really will make a significant difference in that sector And I think there probably is.
Yeah, I'm sure one of those companies will be it, but there will
One
be a lot
them
of
will
them that
be.
won't.
Yeah. Maybe this is when you get into the ETF sectors, and in fact buy a bunch of these stocks
And you let them do the kind of the work
and
for
let
you.
them do the work for you.
I think that's a good idea, actually. Well,
That's all I got today.
thank you, sir, and I will invite Mr. Kincaid on. What you got for us today, John?
Well,
Let me help you out here.
so I hope you can see that. We've got the Dow Jones Industrial Average, an index that we all follow. Maybe not the right index for you, but the point is that it's highly followed. It's 30 stocks. Apple's part of that. There's other technology companies in it. Anyway, we just recently hit 30,000 on the Dow Jones in November of 2020. So I was curious on where we were back in 1989, 1990, when I started in the business, and Dennis and Don probably back in here also. The company was founded in 1987, so that gives you a little idea. In 1989, the Dow in January was 2,500.
That's crazy.
Now there's a point to all this, and I'll make it this way. 95, some 5 years later, you had a double in the Dow. So when I sit down with clients here compared to here, or prospective clients, new clients, they would say, well, 5 years ago, the Dow was trading at half of that. Why should I buy some of the same stocks that are in the Dow? Why should I buy them at this level?
It's crazy valuation.
Crazy valuations. 3 years later, that's 95 to 98. We have the tech crash here in 2000.
Mhm.
So we get from 5,000 to 10,000 in 98. Of course, right in here, 8 years later in 2008, the market drops tremendously. But in 2016, 8 years after the housing bubble and the debacle in 08, we're back to 20,000.
So even with those significant pullbacks, like things that people remember, like if you went through them, you remember those pullbacks.
Major economic event in the housing bubble, major market event in 2000 in the tech bubble,
And the Dow still marches higher.
still marches higher. Now, the stocks that were here in this Dow are not the same stocks that are in this Dow.
Sure.
So that's something to look at. But here we go 4 years later. In the last 4 years, many of you have been clients, and we've seen another increase to 30,000. My point is this. Next week on December 10th, I think it's next week, we're going to have a lunch and learn at the Strand where we introduce people, prospective clients, to what we do. Now, the point is this. Many of your neighbors or friends or people you meet at a party will say, I wouldn't get in the market now with this level. We heard Dennis talking about the speculation.
Sure.
But really, the reason you would get in this market at this level is because of the strategy of what we do in the enhanced dividend portfolio. Mapato, you know it as Mapato. But what it does is it takes the volatility and reduces it as it drives income and some gains over time. So if you were an investor down in 2000 and you are now still an investor 20 years later, you've not only had great income, but you've had appreciation to the tune of about total return of about 8%. Year in, year out, regardless of the challenges in the markets or in the economy.
Well, thank you very much, John.
Yeah.
This was the Naples Money Managers news you can use. Remember, money matters, but at the end of the day, most importantly, you matter. Thank you so much, and we'll see you next week.